to discuss with Mr. Rewane. Mr. Rewane, good morning.
Good
Not
morning.
a stranger, obviously, but good to have you physically
Yeah,
in the
thank you.
studio.
Thank you for having me.
Yeah, so this expansion of Dangote and partnering with this German company, what can we expect from it?
I think the way to look at the Dangote group is to say that they're doing two things at the same time. They're diversifying and also integrating backwards and also forward. That leads to a lot of efficiency, reduces average cost, and actually enhances the position of the client and the customer and gets more value for money. So you must remember that 10 years ago, we were producing only 1 million tons of fertilizer every year. Now we're up to about 8 or 9 million tons. We are now, Nigeria is expected to earn at least $3 to $4 billion from fertilizer this year alone. It's actually overtaking cocoa. Cocoa, even at the high price of $12,000 per ton, which it was last year, we're getting about $3 billion. Now it's dropped down to $6,000 per ton, and we are now almost about $2.5 billion. So, one, it helps the country diversify its earnings stream and export earnings. It also helps the company make sure that its revenues are insulated from shocks.
And because a lot of Nigerians have not been feeling very comfortable. We hear of a partner, Dangote, whether it's the refinery or the fertilizer or the cement, partnering other countries, and we're like, nobody's going to take our own from us and all of that. But I guess it all comes back home when we talk about benefits.
Yeah, the way to look at it is that the democratization of ownership. You partner with international leaders in the industry, but also Dangote has promised to get listed, the refinery to be listed sometime next year, and that will bring a lot of everybody, widows and orphans, to the market to benefit from this whole thing. But I think the most important thing to talk about is this 15% import levy. Is it good or is it bad for Nigeria? I think that's the key thing. There's been a lot of debate. And you have to ask yourself, would this levy lead to higher inflation? Would it lead to higher prices? Will it lead to fewer jobs? So when you put all of these things together, you have to ask yourself a question. But let us start from knowing what are the facts about the downstream industry. The downstream industry there are 33,000 petrol stations in Nigeria today, across, the leader being Total and then others. Nigeria is supposedly consuming 45 million liters of petrol every day, PMS. We don't know whether that is true, but let us assume that is true. Dangote's refinery, largest single train refinery in the world, 650,000 barrels, now to be expanded to 1.4 million barrels. Dangote refinery produces PMS, AGO, and DPK. NNPC and the other refineries have about 5% of the market. And the independent marketers are importing. Now the question is, if you put a levy on imports, will it be good for Nigeria? Will it increase the price? So Dangote yesterday announced a drop in the gantry price to 822 naira per liter from 870 or whatever. Now, historically, in the old colonial times, we had what they call the infant protection industry argument. What it meant is that you protect local industries. When they take off, then you now lift the ban. But the experiment failed because the infant industries remained infants and never grew. Now, but after 1999, the government made a conscious decision to protect certain industries, targeted and we have to look at what happened. So if you look at protection, you have to look at the historical antecedents and say, okay, this is what happened. Cement, poultry, fertilizer, palm oil, beverages, breweries, pharmaceuticals, flour milling, and rice milling. So in this year alone, our GDP, which is growing, now at 4.23%, this year alone, you will see that most of these industries especially brewing, cement. Cement is growing at about 10%. The brewing industry at about 30%. The pharmaceuticals growing sharply. We also have rice milling and palm oil. Now, the question is, let us take three particular industries. And I'm going to quote, nothing succeeds like success. That was what Bobby Moore, the captain of England in 1966 World Cup, told Pele when he said, oh, you're the best goalkeeper in the world. I said, no, nothing succeeds like success. Now, let us take the palm oil industry. Palm oil industry, 10 years ago, in 2014, was having a turnover of 8.65 billion naira total, right? Today, Okomu oil is actually generating 231 billion from 8 billion in turnover. The dividends paid by Okomu oil in 2014 was 95.95, that is 1 billion. Today they're paying dividends of 23 billion naira. They went from what the government did, imposed a 35% import duty in 2001, increased it to 50%, and made palm oil ineligible for foreign exchange. Now, total market capitalization of the two palm oil producers is now 2.79 trillion. The taxes they paid, their total assets are 117 billion naira. And the dividends they paid, of course, I told you, was 22. Now let's go to cement, which is a very interesting one. The tariffs were increased to 35 to 50. Import restrictions were imposed when Obasanjo was in government. The installed capacity of Nigerian cement was 2 million tons. Now we are a net exporter. We are producing more than 70 million tons so you have Lafarge, Bua, Dangote. Total market capitalization of this sector is 19 trillion naira. 19 trillion naira. The dividends they paid last year was 502 billion. The total assets are 6 trillion naira, and profit after tax is over 1 trillion naira. I think that it's important to know that. If you go into the brewing industry as well, you'll find that what the government did was to ban the importation of barley and introduce import licensing at that time in 1986. Today, the brewing industry, when you take Guinness, Nigerian breweries, and others, they are paying out dividends, even in a bad year, of over 8 billion naira out there. So, what am I saying in short is that you protect industries to allow them grow, to become more competitive because they have a critical mass, but you don't do it at the expense of the consumers. So you have the Consumer Protection Agency, and anybody who wants to invest in the refining business can invest in refining because they have over 30 licenses, only about 2 or 3 are producing. So you do not protect inefficiency, you protect efficiency. So Dangote in the last year has reduced prices at least 9 times, right? And the petrol in Nigeria is at about 70 cents a liter compared to $1.25, $1.40 in Cameroon, Benin Republic, and Niger. So it has helped to reduce the demand for foreign exchange. And you can see that the Naira has appreciated in the last year by over 11 or 12%. Part of the reason for that is this. It has created jobs, it has reduced logistics costs for companies. Because if you look at corporate earnings and performance and cost structure, you will find that there's the greatest component of their costs are logistics, followed by finance, then followed by exchange rate volatility. So if you bring the logistics costs down because of the price of petrol coming down, you have actually reduced the cost of companies, increased their margins, increased their profitability, and given them opportunity to employ more people. I think it's very important that we note that.
But Mr. Ryan, did you see any change on this 15% import? Is that a possibility?
That the government will reduce it? No. Why do you have to reduce it? The point is that if anybody wants to invest in refining in the country, let them invest here. We don't need to buy imported products because that means you're creating jobs in other countries. And let's sit back and look at how the refining industry is going this year. High volume, low margins. And it's now having what they call hub and spoke strategy. The West African hub, the West and Central African hub, is in Nigeria. We are exporting refined products across the entire region. You have hubs in Singapore, in Rotterdam, in Houston, in Mexico. So for you to compete, you need a critical mass. And the critical mass helps you to reduce your average cost and pass it on to the consumer. And I tell you something, when MTN and all the Glo and V-Mobile, right, Airtel came in, it was 50 or 60 naira per minute for calls. When they grew and invested heavily, today you're having calls per second calls and all of that.
Yeah.
And a SIM card that time was God knows what. Now a SIM card is zilch, is zero.
Yes.
So I think.
So, Mr. Rand, there's another issue I would like for you to wade into, which is the capital gains tax. I've spoken to a couple of stockbrokers, and they tell me that it's the reason why we are having a lot of profit taking in the market.
There's no difference between a reason and an excuse, right? So, but the reality is it's not the only reason. It is one of the reasons, right? The reality is that the reason why capital gains tax is lower than corporate income tax is to encourage people to invest, right? Because if they invest, investment is a form of savings. If they invest, those savings become investable funds, and those investments has a multiplier effect on the economy. If they don't invest or if they disinvest, which is what is happening right now, it has a negative multiplier effect. So what you are seeing today, apart from the whole fear of the Trump threat on Nigeria, is the fact that people, if you made a gain of 100 billion naira by selling your shares today, assuming that you bought MTN shares, you bought Okomo Oil shares, you bought Guinness shares, and you would have made maybe 200%, 300%. If you made 100 billion naira gain, and this month, you will pay 10 billion naira, 10 billion naira as withholding, capital gains tax. If you wait until January, you will pay 30 billion. So you are giving 20 billion back to the government, right? So, which you would have reinvested and done more and more. So, no matter how beautiful the earnings of the companies are, people are taking their position on the fact that it's better to have the money in your pocket. It's better to cry with money in your pocket than to cry with in an empty pocket. So you are going to see this continue in spite of other threats. And my suggestion one is reduce the capital gains tax 10 back to 10 or 15, or defer the implementation date, because we don't need anything that will frighten investors, both domestic and international. We need this just as much as we need a bullet in our heads.
We don't need a bullet in our heads. Well, I hear there's a lot of communication and intervention going on, but I don't know. I don't know if it's going to yield any fruit, and we're already in November. It's just a month in between before we get to December. We'll see what happens there. But there's also, we're expecting inflation numbers in about 4 days, normally on the 15th. And once again, FDC is
projecting 17.54.
A moderation. But we know that in the last month, we've seen increase in petrol and all of that. Isn't that supposed to lead to a rise?
Technically speaking and theoretically speaking, it should. But what we've noticed is that, first of all, there's a lag between when decisions are made and when the impact is felt. There's a time lag. At times, it's short lags. At times, there are long lead times, right? But what we've noticed is that there was an 11% increase in the price of PMS. But last time when the prices came down, we did not see any reduction in transport fares, right? Consumer prices were sticky downwards and transporters were watching. Now that the price has increased, we've also not noticed any increase in transport fares because of volatility, people are not sure whether you are buying yesterday's petrol or tomorrow's petrol. But what I can tell you is that come December 1st, there's going to be this seasonal effect. Demand for foodstuff will increase. Demand for traveling increases. Some people travel only once a year. And so if that is the case, then you would have that natural increase. But we are talking, this projection is for the month of October. This actually came in sometime towards the end, so you will not feel that impact. What we are seeing also is a carryover and carry forward of this thing. Don't forget, in the month of October, from September to October, we had a sharp reduction in money supply growth, one. Two, we also noticed that the Naira appreciated almost cumulatively about 11%. And nothing is more potent to drive price increases or price decreases than the exchange rate. So you have the exchange rate, you have the price of gasoline and petrol, and you have the money supply growth. All of these factors were moving positively. However, like they say, one day is a long time in politics, and 1 year is a long time in economics. So what we are going to see is that we think that October inflation would moderate, but November will flatline, and we may begin to see an increase in December. The outlook, therefore, is that the central bank will meet sometime this month, about 24th and 25th. We believe that it was almost clear that the central bank was going to bring down rates. Central bankers by nature are cautious and conservative, and they will rely on the data. If the inflation data comes out for October and they project that there's an elevated risk of an increase in inflation, then you may see that the central bank may sit back and say, okay, let's hold and see, have a wait and see, very cautious approach.
I guess that looks more likely at this time,
yes.
Just to see the impact of the last cut and see where we're going to with all of the sticky prices. But thank you so much, Mr. Bismarck Rewane, for your time on the program and sharing your findings with us. We appreciate it.
Thank you for having me.